So I want to run through a couple of slides just to refresh where we're at. Again, this is Oberlin, Ohio, and you heard the statistics. It's a town of about 10,000. It's very traditional in terms of poverty and community for a rural town. I think in some ways the big picture of this is you need to understand the Oberlin Project is as envisioned now as for a town and a community of 10,000 people is a $500 million project over the next 10 years, which is pretty impressive for a town of 10,000. It's in parts and pieces, and it will obviously go on for a very long time. But if you conceptualize the parts at a meta level of Oberlin's extraordinary capacity in the arts and music, the humanities, you heard David, we graduate more PhDs in science than any other comparative liberal arts college in America. And then you think about how sustainability is a mindset. It's how we think. It's a paradigm. And so in the end, it's about learning, or Len Ring, as I wrote it last night at Too Late, and that creates mindset. So these are parts of this new mindset. That the Allen Museum, which you heard of, the Cole Jazz Center, which is a LEED silver or gold building. It's just an amazing addition to the conservatory, the Performing Arts Center, and the Science Center. And then its integration across all the different platforms of education from K through 12 through VOED and through Oberlin College. This is in some ways where it started, the Adam J. Lewis Center. You saw it yesterday, but I think this galvanized sustainability at Oberlin, and it also, by building this building, which has attracted tens of thousands of visitors, and having to have raised so much money to do it, virtually without the support of the president at that point, it began David's journey in thinking big and knowing how to raise a lot of money. So I would put this as the marker of really the beginning of the project. So as you know, we're working in energy, local food, smart growth, local ownership. Those are the big goals. Creating at some point a community which is more fully sustainable and actually more secure. A long list of kind of design and learning and practical objectives of what we want to do. You saw the location. I have to say, being at Bard College and being in the glorious Hudson Valley, you can imagine how different it is. I grew up in Cleveland, which was the city that had the second most corporate headquarters in America. It has one left. I grew up in the city that could have been Detroit and was the second Detroit, and Rockefeller built. And now that city is hopelessly poor and has to really rebuild itself. And I think one of the lessons I've gotten out of working both for Evergreen and at Oberlin is sometimes you got to hit the bottom before you're ready to do something next. And having lived in Massachusetts, in the Western Massachusetts, for 35 years now, and we do all these hip, cool, wonderful things. We're building our sustainable world. Sometimes I ponder whether we'll ever really make the changes, because we're just not desperate enough. If you go to Cleveland, you can't think like you used to. Capitalism and the markets completely have failed you. Oberlin's not anywhere near as challenged. It's an elite liberal arts school, and it's got resources, but it's still. Frankly, it's in the flyover zone, right? This is the part the coast could care less about, that great Midwest that feeds us, that built most of our wealth, and today, the downtown you saw, the downtown as it's becoming, the three students that were David's students, who at 22 years old somehow raised $17 million and built the largest commercial piece of real estate, of housing and new businesses I think, ever really created in the commercial district of Oberlin. The beginning of the rejuvenation of economic development of a community. And that's a huge part and piece of this. It's not just the transformation of an elite liberal arts college, it's the transformation of a community. Another view of the Adam J. Lewis Center, just so you get a sense of the size and scale of it. And so, again, what we're trying to do, and I think it's really important to remember, educate everyone for sustainability. What you see and what you hear about the Oberlin Project at some point sounds like we are going to build more buildings. We are going to build more energy systems. We are going to build new businesses. We are going to, take 20,000 acres out of corn and soybeans and turn it into local foods. We will only succeed at this, ultimately, is if we can help people learn a new way to think. And I think that, at the core, is the most interesting and challenging part of the Oberlin Project, learning a new way to think. And you see that all through the system, but the one I obviously know the most about is the college. And the challenge, I think, for all of us is to make sustainability and transformation relevant to all academic disciplines. If we are only about climate change and environmental transformation, then how does the economics department or the chemistry department or the English department or the philosophy department, how does the music department, how does the amazing Oberlin College Conservatory of Music relate to any of this? And that's the part of this that I have been really intrigued by. So you've seen the goals, and the first goal, this Green Arts District, a city block, is kind of the heart of this, because it's where you really test how a jazz center, a traditional conservatory of music, digital arts, fine arts, meets sustainability. And I think if you all have any college students and young people in your life, you know that the digital arts and creation of arts is an expression that many young people are engaged in. And it's a place that they tell their stories, and we're going to tell a new story. So I think it goes to the heart of this new mindset. We're going to become climate neutral. You heard David talk about that last night. We're part of the Clinton Global Initiative, a 20,000 acre green belt eventually. Cleveland, Ohio is the #2 local food city in America. Who would have thunk? And the Cleveland Foundation, which is the same entity that is backing the Evergreen Initiative, has likewise done a study to really understand the economic rejuvenation in Northeast Ohio if we grew 25% of our food. It's really pretty profound. Education and replicate. This is the Green Arts District. You saw it yesterday. And that's the current Oberlin Inn. And you heard what David said. And it's really interesting what the linchpins of development are from a design perspective. Everybody agrees this thing has to go. The trustees got bed bugs when they came in this thing. But the question is, what should it become? And, colleges are challenged for money and endowments and all the rest. And I look at this as kind of what David was faced with when he built the Adam J. Lewis Center. Okay, we're going to build the Green Arts District. Okay, you want to build a transformative green learning center and a hotel. Okay, you raise all the money. And by the way, don't raise any of it from our alums. And by the way, do it in a year. And David largely, some minimal help from me, I think mostly as a sounding board and some guy he can talk to about it, he's at $8.5 million. And on On Friday, the trustees voted to go ahead with it. It's the linchpin because it'll be the largest single building that the college has built in.
Can you back up and show us where it is on that plan?
It's down in this corner.
That's it.
This is the Allen Art Building, as you heard, David, the third finest art museum. I still don't know quite how this happened. I think this happened when Cleveland had extraordinary wealth. But I'm not, it's a mystery to me how it can compete with Yale and Harvard. The Performing Arts Center, which is largely going to be taken apart and built as a modern performing arts center, perhaps like what we're enjoying here, but it will all be at platinum levels. And then this is where the current inn is, and this is where that beautiful new building that three, now 30-somethings have built. The good news is that that is going to be replaced. These are still conceptual drawings, but all of a sudden there's going to be something much, much grander as part of a community that's going to not just save energy, but being a living system, and it's going to be the arts meets sustainability. You saw some of the capital engagement. Another piece that was really important in this that the college got through was this piece up here. A 2.25 megawatt solar array, largest array built on a college. I think maybe even a university in America at this point. It's an example of the kind of change that happens in this. A place like Oberlin has never built anything like this. There's all kinds of different financing mechanisms. The CFO's never seen one. And so, you know, it's not like a business that's just doing all this. This is all extending people's mindset and their operations. And finally, you know, the last day, because you needed the tax credits to drive this thing, you had to have the deal done by 12/31. You know, on 12/30 it was done. And it'll be up and running in August. So I think David quoted $52 million in what's been spent to date. You know, it's kind of the difference between David and I. Maybe I as someone on the investment side, maybe I count a little more clearly, or maybe I see it in this light. I think it's $88 million we've spent so far. And so, you know, these are where we are so far. That's the array that's next to the Adam J. Lewis Center. That's the goals in the very near term. Believe it or not, Oberlin has a coal plant in the midst of all this that it's had for years for heat. It's not for electricity, it's for heat. And needless to say, it's going to be very hard to do this and have a coal plant, and you have to get rid of it. And fortunately, everybody agrees on that, and fortunately, actually, the EPA is going to force it closed because of all the new regulations. They'll never become compliant. So even the trustees who don't believe in carbon science and believe it, there are some, even in a place like Oberlin, they've even capitulated that they realize there's no way to do it. So what I'd like to close with is some of my observations on the investment side, the funding side, the capital creation side. Like, how in the world do you raise $500 million in a community like this with, you know, lots of poverty, an $800 million endowment in college instead of a $2 billion endowment in college? You know, many years ago, because of where it was located, you had investment bankers. There weren't hedge fund people, but all those things were part of Oberlin. Today, those guys who have all the money send their kids to something on the East Coast or something on the West Coast. So, you know, we don't have an extraordinary endowment. We have a strong endowment. So all through all of these mechanisms, college investment, private investment, tax, different kinds of tax funding, new market tax credits, historic tax credits, state and federal support, philanthropy, you know, using every kind of trick in the book, and we'll learn a lot more, actually. We're going to learn about how to get wetlands credits. and all these new emerging markets that are happening to further niche areas of this transformation. Needless to say, skills that are not inherent in any of these institutions, and frankly, aren't really inherent in a lot of institutions, even sophisticated ones. So I hope you can read this. So this is a presentation that David and I made about the Oberlin Project a few months ago at the Garrison Institute, and so he did his side, and I was asked to do the finance side. So, you know, these are just some top-line observations that I'd like you guys to think about as you take these things into your communities, into your institutions. Are there very many finance people in here, investing people, kind of have done? Yeah, so, you know, you need those guys if you're going to do this anywhere. You need your allies, you need your friends, you need to think it through. So one of the things that everybody thinks about, well, first of all, it's predicated on securing major financial resources to accomplish social, ecological, educational, and economic transformation. Okay, we agree, $500 million is a lot of money. It's creating new financial models of investment strategies based on partnerships, which are often, you know, very challenging, even if you're not trying to do this, just creating those partnerships in more traditional economic development terms. You know, then you have all of these existing and new kinds of resources. But here's really where I come in, and maybe you can't read this. Although the investment instruments are important, the process of transformation turns out to be predicated on changing the culture of engagement, risk assessment, and building a culture of sustainability. Like, all this is actually pretty easy if anybody gets it. But if only David Orr gets it, it's really hard. You actually have to have the CFO start to get it, instead of start to think that you're just making my life impossible. You have to get board members, you have to get other people in other departments to get it. So the challenge of acting on this insight has often been underappreciated in the project and other innovative sustainable financing schemes. If you don't take anything else away from my side, you know, try to ponder what this part of the puzzle is. It's rarely actually that capital can be found. There are really, as John Fullerton and others have described here, there are major capital dysfunctions on a meta level and on a local level in building wealth. We're still at a point where you can find $500 million to do this. We will find $500 million, but we will only find that $500 million if there are not 3 or 6 or 9 people that have some vague idea that 1, it can work, 2, to think this way, and 3, to be able to act on it. And you know, a key challenge is that decision makers face psychological barriers that prevent them easily or quickly shifting to take advantage of the benefits of new approaches. A CFO is worried that in his latter years of being a CFO, maybe something will go bust, and that will be how he's remembered at you know, all of these kind of questions. And you know, it offers unique opportunities to measure climate sustainability impacts for the investments, which is another, you know, we're going to reduce carbon, but let's also demonstrate the case for how these investments really shift. And these opportunities should sync seamlessly with the many other measurement modalities used in the project, which there are many. Every building at Oberlin College and now in the community, you can walk in and you can see how much energy is being used in that building, with state-of-the-art technology, which actually was created there and is now a private company. So this is kind of my analysis of where we're at. I think this is about $450 million. I'm sorry the red doesn't come through very closely, but you can see 175 million or so in these buildings, 70 million in energy, infrastructure, another 80 million, farmland and ag, maybe 50, economic development, maybe 65. You know, I think these numbers could all become, you know, significantly more. What I want you to see here is that all of these things which are tangible in your mind, which you can explain to somebody else, all those beautiful buildings, that shutting a coal plant, putting a PV facility, you've got $450 million. Now, the part of visioning, managing, executing, learning, teaching, you might have 25, you might have 30 million. In other words, there may be something wrong with this picture, because in the end, this is where the paradigm shifts. This is where you relearn. This is where you reimagine. This is how the community engages. This is how a bright idea becomes embedded in a college, becomes embedded in a community, and then you remake those things. And it's just curious that our minds, go to the concrete, which is obviously a good way to learn and grow and all. But you also need that other really important part, which helps you envision, create, and learn. And if we have also heard something about new economics and building this new future, it really is about new mindsets, new paradigms, and new ways of learning. Many, many people have expected. So I'm going to close with one other part and piece. I've been a serial entrepreneur in sustainability, and I'm currently a partner at Veris Wealth Partners. I've kind of started my life with a rototiller in a garden and from a farming side. The piece that's changing, one of the pieces that gives us hope, is that after 25 years of socially responsible, ethically, mission-related, whatever you want to call this whole new kind of investing, is actually becoming something more scientific. It's actually becoming something that's accountable. It's actually changing the way businesses are done. And this was an extremely important research project that was published just in November. And 20 years of research by the Harvard Business School, that elite business school, which matched up 180 companies and looked at, they did get to economic performance, but look at what the headline, the consequences of a culture of sustainability on corporate behavior and performance. You could say the culture of this at Oberlin College. You can put this anywhere. These lessons are totally transferable, that it is the consequences of that culture of sustainability which drove, in fact, this cohort of the high sustainability businesses doing much better financially. For us as investors, you can see very, very clearly what the argument is. And what do they characterize? They have different governance mechanisms. They have different stakeholder engagement. They have a much longer term time horizon. They're not quarterly driven as much. They have greater attention to non-financial measures. They have higher levels of transparency. And they have superior accounting and stock market performing. It's a big study. It can be summarized. You can get it very easily on the web. This is where the change is. It's going to be the change in business. It's going to be the change of Oberlin. So my final notes, which are in some ways you've heard. So sustainability is a state of mind. And sustainable capital investing to make sustainability is also a practical combination of a practical reality and a state of mind. And as we loosen up our flexibility in our minds to do this, we'll have a lot of success. Thanks.
I have a question right away for Anders about this. And that question is, what do you see as the long-term opportunity for the town of Oberlin and the community of Oberlin as this project is realized? What do you think is the difference it's going to make in terms of the life of the community, and particularly in terms of some of the issues we've been talking about this week about keeping money in the community, about creating wealth in the community? So you have a lot of buildings, for instance, which are relying on almost no energy or generating their own energy. So the college and the town will be sending less money to the fossil fuel industry. But do you see ways in which that's going to impact the community long-term?
You know, this has been a core, and this has been a core concept of the Oberlin Project right from the beginning, is the economic transformation that is actually, frankly, allowed to the college for its own sustainability and durability, but is equally driven for the town and city of Oberlin and the environments around. David could quote this a little, you know, with more accuracy than I am, but there are already on the order of 15 new businesses. You know, part of why we've fought so hard to build this hotel is that it's an economic driver. That inn you don't want to stay in, right? But that inn can't host anything. So if you look at where Oberlin is, if you look at its assets, if you look at the populations that are around, you can build a convention center of creativity and sustainability. This isn't like hard to imagine. And all of a sudden, you're going to have thousands of visitors with a place to stay. There's going to be a culinary arts institute built by the VOED school in partnership that is going to be a slow food, local food. We're going to train chefs of the future. Since remember, Northeast Ohio is already really on fire about local foods. So there's going to be new energy businesses. There's going to be new retail businesses. There's a major development with a big organic food retailer. There's going to be new businesses in energy and a lot of spin-offs like Lucid Design that was created on the measurement side to help drive. So I think you're going to see technology companies and you're going to see in-the-ground food and local food and probably learning companies that are going to come out of this as you get this mix of entrepreneurship and you give a lot of opportunity to a community that really needs jobs. You know, just like the Bronx does or Cleveland does in the inner city, we're not a glorious, happy rural community. And we're like lots of communities, we need jobs. So I think that's been a linchpin for building this partnership. If it was just about becoming climate positive, it's interesting to the city, maybe in a lot of citizens. But if you drive economic development in a sustainable way, it's really cool.
With that, I want to open it up. Yes, sir.
An interesting adjunct to what you just said is that these plans will allow the college and the municipal government to constrain energy and operating costs over decades to come. So the electricity of 30 years hence may be worth 10 times what the electricity is worth today, but the means of delivering that essential commodity to the operations of the institution and the municipality will already be bought and paid for. So you've created, therefore, a sort of a money tree or a cash cow. And when you talk about people even who work for hourly wages, both the municipality and the college will be less constrained about cost of living adjustments for those hourly employees. So I just want to throw you a bouquet as an adjunct to what you've already so well stated.
Well, that rolls down to the people of Oberlin because they're going to have all the same matters. You know, as they move off fossil fuels, as people are driving electric vehicles and other vehicles, as their energy efficiency is really, so you kind of build that economy in right across the whole system, and you're absolutely right. It's part about, you know, building yourself to last.
Hi, my name is Rebecca, and I am a student, and I also work at Pratt Institute in Brooklyn. And I think that my question stems from thinking about using new construction, new development as an economic development tool in poor neighborhoods, but making sure that it's inclusive to the residents that live there and making sure that it's not a driver of gentrification, particularly in urban areas. This is a huge concern. So my question is what is being done to ensure that residents aren't going to be pushed out when you're bringing in all of these buildings that are bringing huge capital, huge attention to the area? If more people are going to be buying homes there, how are you going to address, well, you never know. How are you going to address that, that low-income residents are able to stay, and also to frame it, you know, in the urban environment, how do we make sure that that's something that's a positive economic driver?
I'm just wondering if you could say a little more about the messaging. I mean, you talk about the core challenge of getting this mindset change and understanding of the culture of sustainability. And I wonder if you could drill down a little bit in the messaging that is used when you run into that at the administration level or community level among those partners, because, I mean, that's a key piece. I think I'm just curious how you communicate that and get results.
Just related to any of your materials about the messaging available on the internet?
Okay, I've never been to Oberlin, and I didn't hear David's comments on the plenary, so I'm having trouble visualizing the city. Is the city independent of the college at all, or is the college the absolute feeder for the city? Without the college, would there be an Oberlin? And I'm sorry, if Oberlin wasn't there, would there be a city? And the question I have is somewhat related to what this woman was saying, which is I couldn't tell from your presentation if the city benefited as well as the college here. It sounded like the college benefited enormously, but it was hard for me to tell how much the city benefited independent of the college.
And in the very back.
My name is Monica, and I'm trying to start a cooperative in Boston where education is infused at every level. I'm also a community college professor. And I would love it if you would share more about how the reinvention of learning was in practice at the heart of everything, both formally at Oberlin College and in the K-12 system, but also informally in work and in other aspects of the community.
Great. Thanks for the presentation. I wanted to just follow up on the financing slide that you had put forward, which showed this kind of diversity of funding sources that have gone into these projects. It seems that in a world where the Recovery Act is now behind us, that state and local and particularly federal grant monies and tax incentives are no longer going to be accessible to lots of communities, or at least in the kind of numbers that they were. Wondering if you could comment. You suggested that capital will be available for these projects. Wondering if you could comment on kind of what fills those gaps, whether it's impact investment dollars or program-related investments, and specifically kind of where you've seen opportunities for that in Oberlin.
So first, it's important to know what Oberlin is. It was one of the last stops on the Underground Railroad. That's why it's a quarter historically black. It was built as a utopian community in 1844 as part of the whole utopian movement. It was the first college to admit blacks in America. It was the first college to admit women in America. And it has this amazing combination of intense rigor in academia, which graduates PhD after PhD, med students after med students. At the same time, sends people out in the world to make a difference, and that's what Oberlin is. So it's an interesting combination that's already, you've already got baked into the equation of what Oberlin is in some ways the gentrification question that you're asking. And I think, you can go to Oberlin, Ohio and buy a house for $82,000.
And you're all welcome to.
Yeah, and you're all welcome to. One of the cool projects that's part of this organic food thing that's happening is going to be attached to green affordable housing for people that are, in the 25% poverty. The opportunities to reuse the whole food stamp, local food, putting those into food, building businesses based on transforming how we eat in our school systems, in our institutions. Transforming, in my opinion, just like building a sustainable mindset is going to be a long-term challenge. How much have we succeeded at not gentrifying America? We have concentrated all the wealth in not 1%, but in a fraction of 1%. So this challenge is going to be with us. And the best hope there is the 300 people. I didn't put all the planning diagrams, as David said yesterday. He couldn't put enough modules, but that's why he's not here today. He's back for the meetings tomorrow with the leaders and captains of all those different teams. I think that's the best hope, because it's not just it's not just the elite of these communities, it's truly a cross-section of these communities. And I don't really think I can say more than that. People at the lower economic means, they want jobs, and we all want jobs, and creating new green jobs that really have a place to go and not training people for no job remember, if we can create 200 or 300 new jobs in this community, that would be just mind-boggling. So that's as good as I can do. And your question is really well stated.
I think it's an important question too, and I think Oberlin, because it's not, I mean, the jobs are local jobs. The construction jobs are going to be local jobs because that's who there is. And it's not like you're in an enormous metropolitan region where there's going to be a lot of moving around about that. And I think that some of these other questions about how independent is the city from the college, this is a very small laboratory opportunity because of the intimacy, as I understand it, between the college, the scale of the college as a force, and the scale of the town. And that gives you the opportunity to do something really fairly unique, and plus the history of Oberlin, which I was not aware of, increases that in its commitment. So it's a chance to pioneer something that's not immediately possible or evident in other communities to the same extent, and that may go to some of these questions about messaging and financing and changing mindsets because it's such an intimate circumstance. But I think the question, one of the things I would urge activists about local jobs and gentrification is that, you know, I heard years ago when people were arguing about how to do the Atlantic Yards in Brooklyn, the concern about displacement, and when the developer Jonathan Rose was trying to bring a couple million jobs practically into the heart of Brooklyn, and people were concerned about displacement, there's a kind of knee-jerk assessment that, well, if we keep this place crappy, then people won't have to move. And that seems to me to be a terrible strategy, you know, that we want to gentrify places, we just don't want to displace people, right? We want to make these places better, more vibrant, more exciting urban places. We want to do it with people in place. And the Dudley Street project that we saw yesterday was a really interesting example of this, of how to build really generational capital in a community by not just keeping people at the same income level in the place, but having generations come back to want to live there. So these more complex strategies of ownership, of rent control in some cases, which we've been outlawing all over the place, that's the issue, not keep it lousy and keep the job forces out of the community, but to bring them in and build the local economy at the same time. So I would like to, I think that there are other questions about messaging, about the mindset, about how you do the educational piece that we'll maybe come back to in this. I think the question about financing now that ARA's not helping is just huge, right? And I think Oberlin, because of its intimacy, because of its uniqueness, has answers that may not be as easily applied in other places. You may want to speak to that. But I'd also like to put out some questions to you in the audience about these strategies for creating wealth in communities, either at Dudley Street or Codman Square, or even what I know John is doing at Next Step Living, where the idea of weatherization and of improving people's energy efficiency at every level it's a wealth creation strategy, because as exactly was said, it means that over the long term, people have more money to spend on other things, and that's a really essential strategy for keeping capital in a community. So I'd like to know if anyone wants to address that or engage that question about creating wealth in communities. Yeah.
Hi, my name is Larry Steele. I work with Hardin Geothermal, a company in Indiana, and they're advancing a district utility scale geothermal model. And I think that's a great way of keeping wealth in a community. There's one in Wyandotte where they've connected about 50 buildings, and there's another one in Union, I think it's East Union, Iowa, a town of 2,500, where they've managed to generate $7 million in grant money, and they're completely resurrecting their downtown area over there. But so it's a model that generates permanent revenue streams, and as well as sustainable energy systems. And the challenges for us are, we've made presentations to Kingston locally, and there's a consensus that they want this and need it, but they need more effective strategies on how to raise money. And that's one of our challenges at Hardin Geothermal, is trying to interface with local or out-of-state sources. The banks, it's not enough to just offer them a signed power purchase agreement. That's apparently not enough. They also want your firstborn. So if there are more effective ways, if anybody in this group has more effective ways of generating income after the power purchase agreement is signed, we would love to hear that.
Well, that's an interesting place where development, economics, and financing issues overlap, because we're trying to convert through large capital initial investment into something that's a long stream of steady revenue to a community and of steady savings. So maybe there's a project in NEI or in one of these organizations about educating investors as to this opportunity, because we have this other strategy of addicting people to cheap oil and then having them on the tether forever. So trying to move from that. Other ideas about these interface?
I have some experience in working with the community land trust model, and that I think does a couple different things. One is, I think it takes the speculative nature out of home ownership, and it also creates a very much a coaching and mentoring model. The foreclosure rate on community land trust mortgages is incredibly low, even through this last downturn, because there's a real mentoring throughout the whole process of not only, what kind of debt can you actually take on, but you cannot get into as much trouble, and there's continued help and assistance to problem solve throughout the whole process. I think it also gives you opportunity to shape the development to incorporate things like community gardens and food processing and preserving, et cetera. So it's one that we have. I'm from Washington State. We've used in a couple different areas, and I'm looking to see if we can expand it more. But I think that also addresses both wealth creation, because we see people who actually do build equity, and there are a good percentage of people who then move into market housing and use that equity. But it also it
addresses the people's affordable strategy.
Exactly. You are. And you're doing really some mixed income integration in a lot of the project as well.
Hi, I'm with the Dudley Street Neighborhood Initiative in Boston, and we're in a neighborhood that 10 years ago we would have been shocked to see the price of housing today, and the kinds of gentrification that's happening, and
Congratulations.
So, yes, great, and so it is a sign of success, and at the same time, how do you fight the displacement of families who were the ones who fought so hard to keep to make the neighborhood what it is? I just think I know Oberlin's a different case than Roxbury in the middle of Boston, but there's a lot going on in our community land trust in Detroit and New Orleans, where communities are trying to anticipate future, all of this vacant land and distressed properties, and trying to anticipate how do we keep city and community control over that land, so that when it does, go up and the investment starts coming in, there's control, and there is a chance of limiting the displacement and keeping the balance of community wealth as well as outside speculative wealth. So I think there's a lot to be learned, even in as smaller cases as Oberlin.
From what I know of Cleveland, it would be a great model where, having been at the Cleveland Clinic, and there's miles of dead land surrounding it, yeah, that would be a great idea. So we have energy strategies and we have land strategies. Does anybody want to add to these or add other things into this discussion about how we use these what I see as sort of seed projects to regenerate neighborhoods and think about how you use those to create new economy, but to create wealth in communities. Any other thoughts about that?
An earlier question was about messaging, and I think messaging is inextricably intertwined with marketing. And besides the historic desirability of Oberlin as a destination community, I think we should not overlook the fact, when we're talking about financing the future, that Oberlin's chances to attract high-value intellectual property, information technology, energy technology, employment is an adjunct to the college's essential role in the community, but it's an element of diversification. So when you're talking long-term capital aggregation, you're saying this will not be a one-industry city. This will be a city where this anchor function, the world-famous institution, is helping to attract a diversity of high-value investment. And therefore, in the wake of the winding down of ARA and our looking to the private sector, because we're going to be stressed in trying to find federal resources or state resources in a state as distressed as Ohio, overall distressed as Ohio, then one answer is you're building a secure future which undergirds private sector investment in the long term. So it's a marketing question, and the marketing question, the messaging question, helps remove risk from private investment in this venue.
It goes to something that people in my line of work have been talking about for a long time, which is that quality of place is an economic development strategy, because people, when they can put their businesses wherever they want, they put them where they want to live. And living in a town like this, in a college town like Oberlin, with all of the cultural resources, becomes its own kind of magnet. You add to that cheap energy, cool people, good food, and and stable, affordable housing, and you got a pretty good formula. Thank you very much.
Thanks a lot.